Here's 3 ways to increase your odds to get business purpose loans so that way you can buy a real estate property with DSCR loans. Let's talk about it. Now, first of all, if you guys don't know, DSCR loans are simple mortgages that can allow you to buy real estate without having to PG it, without having to personally guarantee it. Essentially, what this mortgage loan allows you to do is use the income, right? Is use the income to qualify you for the amount of the loan, okay? And then use the loan to value to or the equity in the house to approve you for the loan as well. So they're not looking at you, they're looking at your deal. Now, a lot of the times where I best use this particular loan is when I'm coming out of a BRRRR deal. That's when I buy the property, so with someone else's money, I rehab the property with someone else's money, then I go to put a tenant in it. My tenant rent should match the market or be a little bit above market and allow you to be able to make a spread for your new mortgage. Okay, when the bank comes in and they realize that you bought this property at a discount, you now fixed it up, now it's worth more. Okay, so they're going to use that equity saying, hey, well, you know, the property is worth $150,000, but he only owes $100,000. And at that point, since his rent is $1,500, we'll be glad to give him a $100 mortgage because his mortgage payments will only be $900, allowing him to make $600 in monthly cash flow. And because, hey, this guy has $50,000 of equity and $600 a month cash flow, we will now lend him this money. Those are the kind of mortgage loans that you want right there, not ones that that you put your personal name behind, because doing it that way, you're now limited. Okay, you can only have 10 loans at one point on your personal credit. But with business purpose loans, you can have as many as you want. Okay, so here's how I want you to increase your odds to get these kind of loans. Okay, it's number 1 is to have a good credit score. Now, will these loans be in your personal name? No, but before you get these loans and back them by your businesses, they're going to pull your personal credit to see where you are. Now, a lot of the times this won't affect the mortgage whether you get it or not, but it will affect how many points they charge you to originate this loan, how much your interest rate is, and then how much prepayment penalty points you have to have if you happen to sell it before it's paid off. So your credit score is in the play. Now, it's not going to take you off the board, but it is in the play with these kind of loans. Okay, the second thing is you need to make sure you have an amazing deal. The better your deal, the easier it is. Okay, if you have $50,000 of equity on a $150,000 appraised house, I mean, that puts you at 65% loan to value. Typically, these banks want to see investors at 75% or less. And if you're at 65%, there's almost no way a bank could say no to that, because there's so much room for you to mess up that they're guaranteed to make their money. Matter of fact, they'll make more money if they take the property back from you and sell it on their own. Okay, so banks love the amount of equity that you have in the property. The last way to increase your odds is to make sure that you're getting the most amount of rent and your tenant is long term. Okay, the shorter the term on the tenant, the more risk it is for the deal. So an Airbnb or VRBO property where a tenant might sign up for the weekend and he might pay a lot of money, that's not a lot of security for the bank. But a tenant that signed up for 3 years on a 3-year lease, paying $2,000 a month when your mortgage is only going to be $900, that is very strong. Okay, so you want to make sure that you have a strong tenant in place. Even sometimes a month-to-month agreement, which is a standard practice in the real estate investing world, can be seen as a risk. Banks like to see that 1 year, 2 year, 3 year lease in place. And of course, the longer, more expensive the lease is, the safer that deal is. So you want to make sure you have a solid tenant. Now, that's one of the reasons why I like group home tenants, why I like businesses who need to rent houses houses and just in general Section 8 tenants who are going to stay there for a long amount of time, because it will give you that solid commitment that you need from the bank when you're trying to get these kind of loans with no personal guarantee. Now, if you like more videos like this, okay, then definitely hit the like button. Go ahead and subscribe and let us know down in the comments below if this was helpful. Okay, if this is your first time here, thank you for making it all the way to the end. We talk about business, finance, and how to make as much money as possible during a 30-day period of time while you cherry pick as many houses as you want using wholesale real estate strategies. So look, man, we look forward to seeing you guys on the next one, y'all. Peace.